All right, let's get right into it.
You know that feeling when you see something unfold that just seems, well, impossible? Kind of like watching the Naira, after years and years of sliding, suddenly dig its heels in and actually start climbing back up against the US dollar. Yeah, that's the wild plot twist we've all been watching in early 2026. For a market that has seen pretty much everything, this sudden show of strength has a lot of us, myself included, doing a double take. So, what is really going on here? Why is the Naira all of a sudden appreciating? And, the most important question, how should you be thinking about your own money in the middle of all this? Welcome back to the channel, Finance People. If you are just finding me, a hearty welcome from the Josh LM Finance crew. I'll be your guide today. So get out your pen and pad and let's break this down. First things first, let's just look at the hard data. Because at the end of the day, the numbers, well, they don't lie. They tell the real story.
So, check this out. In early February 2026, the Naira hit about 1,358 to the dollar. That's on the official market. Now, that is its strongest level in a very long time. And this isn't just some abstract number on a screen, right? This has a real-world impact. It affects the price of that new phone you've been looking at, the cost of booking a flight, even the price of rice in your local market. It matters.
And here's what's backing it up. Nigeria's foreign exchange reserves have climbed about $46.7 billion. That is the highest they have been in roughly 8 years. Now you can think of these reserves as the country's financial cushion. It gives the market, traders, and investors real confidence that the central bank, the CBN, has the firepower to actually defend the currency if things get a little shaky. Okay, now this is where it gets really interesting. Look at the gap between the official rate and the parallel market rate, or let's just call it what it is, what most of us know as the black market. Now the parallel rate is still higher, but that gap is shrinking, and in the world of finance, that is a huge, flashing sign that some real, genuine confidence is starting to come back into the system. So the big question is, why? What's actually causing this? Let's peel back the layers and look at the forces behind this surprise rally.
It really comes down to three key things, and they're all working together. First, like we just saw, those much stronger foreign exchange reserves. That's a big one. Second, we're simply seeing more dollars coming into the country, both from oil sales and from foreign investment. And third, there have been some pretty significant policy reforms from the CBN, all aimed at making the whole system more transparent and, crucially, more liquid.
Of course, whenever something this major happens, absolutely everyone has an opinion. So let's take a look at what people are saying, from the serious economists all the way to, well, the memes on the internet.
So the experts, the economists, they're being practical. They're cautious. They're basically saying, hey, look, this is good, this is definite progress, but let's not pop the champagne just yet. They see a pathway to a stable exchange rate for sure, but they are very quick to point out that things could reverse just as fast as they improved. Then you jump online and you see the hype. People are excited, they're sharing the headlines, and some are even asking, hey, is now the time to jump into Nigerian stocks? They're hoping to ride a potential wave of gains from both the currency and the stock market itself. But on the other side of that coin, you've got the skeptics. They're wondering if this is all just, managed optics, something that looks fantastic on paper, but doesn't really reflect the reality for the average person who's actually trying to get their hands on dollars. They're asking that one critical question: is the liquidity really there for us? And of course, you've got the jokes, abracadabra economics. I mean, you gotta love it. It really reflects this sort of seasoned cynicism from people who feel like they've seen this movie before. So the general vibe out there is this mix of cautious optimism and a very healthy dose of I'll believe it when I see it for myself. By the way, if you are finding this breakdown useful, could you do me a huge favor and just tap that subscribe button? We are on a mission to get to 1,000 subscribers, and every single one of you that joins us helps us get one step closer to that goal. Thank you. It seriously means a lot to the whole crew.
Okay, now for what I think is the most important part of this whole conversation. Let's pivot away from the theory and get practical. What does all of this mean for your money, for your wallet?
This really is the $1,000,000, or maybe the million Naira question, isn't it? With the Naira getting stronger, the obvious dilemma is, should I be saving in dollars to be safe, or is now the time to actually have faith and stick with the Naira?
So here's the crucial thing to understand. It's not just about the currency itself. It's about the return, the interest you earn on that currency. So look, saving in dollars, it protects you from devaluation, no doubt about it. But your interest rate, your yield, might be pretty low, maybe 5 or 6%. On the other hand, saving in Naira, yes, it carries that devaluation risk, but you could be earning significantly higher yields. We're talking 18% or more in something like a money market fund.
Let's make this real. Imagine two friends. Friend A takes 1 million Naira, converts it into dollars, and earns about 5% interest for the year. Friend B takes that same 1 million Naira, but keeps it in a local Naira money market fund that's earning 18%. Now, the key insight here is that Friend B's much higher interest rate could easily make up for any small dips in the currency's value. In fact, they could end up with more money at the end of the year, especially if the Naira stays stable or, dare I say, continues to strengthen. It's all about that interest rate differential.
So to wrap this all up, let's build you a personal dashboard. These are the key things you should be watching yourself, so you can track this trend and make your own informed decisions instead of just listening to the headlines. Keep an eye on 4 main things. First, oil prices. Super simple. Higher prices mean more dollars for Nigeria. Second, remittance flows. That's the money sent home from Nigerians abroad, a huge source of dollars. Third, keep watching that official CBN data on the spread between the official and parallel markets. And finally, the direction of those external reserves we talked about. Is the cushion growing or shrinking? Watching these 4 things will put you way ahead of the curve.
And as always, I have to give the important disclaimer. Please remember, this content is for educational and informational purposes only. It is not financial advice. You should always do your own research and consider speaking with a qualified financial professional. Thank you so much for watching. If you have any questions or any requests for topics you'd like us to cover in the future, please drop them in the comments below. We read all of them. Please share it with someone you love, and I'll see you in our next video. Cheers!